Welcome back. Colgate has actually slipped from the high, so now it's dipped into the red. The two key positives in the numbers were, one, the volume growth of 7% was higher than estimates, and secondly, the company's managed to hold on to its market share at 52.5%, and this comes after many quarters of seeing a decline in the market share. So after many quarters, they've at least managed to hold on to it. But as you can see, the stock price, it initially had a positive reaction, but now it started slipping quite a bit. And Colgate has not done anything for the entire year per se. I think on a year-to-date basis, the stock is absolutely flat. In the last 1 year, the stock has gained close to only about 4%. If we have you with us, what did you make of the numbers? And what should a long-term view be on Colgate? In fact, let me get in a query. Raj has written to us from Bangalore. He wants to buy 270 shares of Colgate for a long-term perspective. And he wants to know when is the right time to enter the market. Gaurang, your view?
So, Rima, the numbers are not really impressive if you actually go to see. And the fact of the matter is that the number of offering in terms of product that they have has actually been some stagnancy. Point number one. Point number two, the recently launched Colgate Wage Shakti. This particular product has not really contributed to a great extent, keeping in mind the competition from Patanjali and, of course, the foray into herbal and Ayurveda products. So my sense is that, actually we have a hold recommendation. So if somebody wants to buy it at current levels, the targets that we have are very close. So it's not really risk reward favorable according to us. Maybe, if it corrects further and a deep correction would be an opportunity to buy. But if I'm looking at consumption theme, then there are certain other stocks which can perform fantastically over a longer period of time. Case in point, Godrej Consumer Products Limited, Dabur or a Marico. So I would rather go with these names. And of course, not to forget, Rima, they have number of products to offer compared to Colgate, which is stagnant.
All right, Gaurang, thanks a lot for that. In fact, we have numbers coming in from Monsanto, net profit at 24 crores, revenue growth of 33%. The street likes that, the stock up 5%. But we'll continue our Colgate discussion with Prakash as well. Prakash, like Rima said, for the last 1 year, the chart hasn't done much in terms of the stock price. And it has underperformed the sector price-wise as well as time-wise. What do you think the chart suggests for Colgate from a long-term perspective?
The basic structure is positive. It's not a weak chart. Okay. In fact, it's trading at a support zone. So this is the place to buy. Continue holding it. Who knows where it goes? 1200, 1300? I don't know. But looks like long term it's a hold. Basic structure positive. Corrections are over. Trading at corrections.
Okay.
Buy it.
All right. So buy for the long term. Raj, news coming in. GTPL Hathway has bagged an EPC order worth 1250 crores from Gujarat. Let's get in our next query. Mr. PG Reddy has written to us from Hyderabad. He wants to invest 1 lakh rupees in BPCL for the long term. He wants to know the right time to enter the market. Prakash, BPCL for the long term, would you recommend a buy currently?
Well, I would say that I wouldn't recommend a buy here, but if it gets at lower levels, I would perhaps buy. Maybe around 250 zones, that's a good place to buy if I have to buy BPCL. Otherwise, I'll avoid it.
All right. Gaurang, BPCL, what would your view be?
Mangalam, we do like the oil marketing companies. And not to forget, they have corrected to historical lows. And our view, Mangalam, is that crude oil is not likely to go to $80, $85 or beyond, stay over there, likely to come down. So instead of buying one stock for 1 lakh rupees, split it into two, BPCL and RIL, since RIL is also into retailing of petroleum products.
Thank you, Gaurang and Prakash, for joining us on the show and answering all our viewer queries. We've run out of time in the show, but do remember to email us your queries. We'll address them with our experts. For the market still holding up, a 450-point rally on the Sensex. The mid-cap's high by 2.5%. Closing bell will take you through the last hour of trade. Stay tuned.
Asian markets, they're trading higher despite a weak handover that we saw from Wall Street on Friday.
3.6 lakh crore of the RBI capital is excess capital and could well be transferred as surplus. Now, that is the scary part.
The market is heavily short, and any kind of buying can lead to huge short covering.
If indeed the government actually thinks about taking away capital or taking their past profits from the central bank, what is it using it for?
It's a 0.5% gain. 44 up on the Nifty, 168 up on the Sensex.
This is the time to start nibbling at equities.
10,090 is currently where the Nifty is at, up around 0.6%.
I think markets are in a better position to digest this particular tirade.
The Supreme Court, in its judgment, also said, don't ask for a hike under force majeure, you can ask on other reasons.
Both government sources as well as sources within the Prime Minister's office saying they are not aware of any development related to any uncertainty with respect to Governor Patel's tenure.
Okay, that was the day so far. Big day for the market. In fact, big gains right now. Let's see if the markets can build on in last hour. This is Closing Bell. I'm Anuj. With me is Surabhi. Hi Surabhi, good afternoon.
Good afternoon, Anuj. I only have one question. Where is this coming from? I mean, today, if you're looking at the global picture, markets are somber. Some of the Asian markets were lower. Crude, if anything, from last week is higher. It's off today's high. From last week, it's still higher. But such a big rally, and today we can't even complain about volatility. So what do you make of the day?
You know, the only issue is if, just look at the global screen and crude and can make money in this market, then, you'll find out that things are different. Surabhi, this was our, main point in the morning as well, and for some time now, right? That this is the zone in which, if a short covering move happens, it will be powerful, it will be big, and the way the market's seen buying in corporate banks today, led by ICICI Bank, of course. This whole SR Steel resolution and the fact that so much money is coming to the banks, the economy overall is slightly on a better wicket. And, sometimes when there's just too much pessimism around anything, I remember last time when there was too much pessimism was around when the four Supreme Court judges said that press conference. I remember that was the time when the market sort of bottomed out a bit. Now you're hearing again some kind of noises. So
RBI versus
whatever it is.
Block.
Yeah, exactly. So sometimes the market actually believes that perhaps too much is priced in now. Now again things could look different from tomorrow, but the market is in a mood to defend 10,000, and I think the market gave you enough messages last week as well. It went to 10,004 and then bounced back. And now, 10,000 as sort of a sacrosanct number. Perhaps you want to build onto this. The first day low of the series, if it does not get violated, in that case, that makes a bit of a low for the near term. So I would want to see if 10,004 is holding. Of course, today it's holding. But next week, if it does that, then perhaps, I think the worst could be over. Of course, a lot would depend on global market as well. Today, global markets have not rallied, but they have not fallen a lot either. True. So that way, there was a bit of a support from global market. But overall, I think things are looking quite interesting right now.
Oh, absolutely. Which is why I think I'd also want to see if in the last hour, we can close with this kind of momentum and not start sort of, selling into this rally. But having said that, the point you made on ICICI Bank and corporate banks, Anuj, is this also one major reason we've got this powerful short covering bounce going? That the fact that the number was absolutely fantastic from ICICI Bank.
I tell you one thing, ICICI Bank for last many days was giving an indication that it's ready to take over the leadership for the next bull market. If you see the month-to-date chart, and if you compare it to, say, Kotak, IndusInd, a lot of money, a lot of smart money had moved from the likes of Kotak, HDFC Bank, IndusInd Bank to ICICI Bank. And, it all boils down to risk-reward once again. The numbers were fantastic. I think this morning, the thought process would have been, just because the market's done that, if it's a 5% gap up, just short it.
Exactly.
That would have been the logical thinking. And that's what a lot of people would have done. And I think those shorts got trapped. Now, ICICI Bank has done this in the past as well. I think it's a bit of a deja vu. So I would still want to see how things move from here. But one thing is for sure, today you should expect delivery buying of around 1,500 to 2,000 crores in ICICI Bank. I think that would be big. Let's see, it's showing enough signs that perhaps it could be the leader of the next market. Axis is just rallying in sympathy with ICICI. But I think ICICI has been a far more cleaner play over the last few days if you see the stock and compare it to Axis. But the fact that a lot of money had already shifted to ICICI Bank was already visible. Today, a lot more would have happened because if you see Kotak Mahindra Bank is still down, HDFC Bank is still down, HDFC is still down. So a lot of banking reallocation has happened in today's trade.
Oh, absolutely. ICICI Bank now approaching levels where it last was in around February this year. We will be discussing that stock and many more. Here's what's lined up on Closing Bell today. Bulls make a comeback on the street with bank stocks leading the gains. It is ICICI Bank's major surge post the second quarter numbers that's helping. We discuss that stock and many others with the fundamental experts on the show. SP Tulsian of sptulsian.com, member of both the exchanges, Deepan Mehta and Mayuresh Joshi of Angel Broking. This may not be the bottom. That is the view coming in from Nishchal Maheshwari of Centrum. He heads the institutional equities business out there. However, he's still looking for very interesting bargains, including the likes of an ICICI Bank. We discussed that, several other stocks and sectors with him ahead on the show. And as always, our technical experts are here to take you through the last hour of trade with some key trading strategies.
Okay, how should you position yourself in this last hour of trade then? We have Ashwini and Mitesh with us. Good afternoon. Ashwini, your thoughts, in afternoon you were making a point of taking multi-day long positions on Nifty and Bank Nifty. Of course, I'm assuming that will be intact, but for last hour, what would be your thought process and what are your stock calls?
You just mentioned deja vu on ICICI Bank. Today it is leja tu. So, for the next 15 odd days, you should see some sort of upside. Things can't keep falling, and we've gone up because we were getting hammered whether or not global markets did something. So my idea is that the market needed a trigger, and ICICI Bank has provided that. Chances are that we will have another excursion to the 200-day moving averages of the respective indices, because today is broad base. It's not your 5-stock rally. So that way, I think even global markets are poised for some amount of pullback. So if all goes well, I think finally the stronger shorts may also question their positions, because the volumes were drying up. It was impossible to sell, and that is where rallies get created. So definitely taking long positions home, and you generally tend to get fast short covering moves which are up like 3-4 days in a row, sometimes gap up, etc. So overall the downside seems to be exhausted. Having said that, individual stocks, Bata is a buy with a stop of 930, target of 960. India Bulls Housing is a buy with a stop of 720, target of 762, and NIT Tech is a buy with a stop of 1230, target of 1300.
Okay, plenty of buy calls on Ashwini's list today. It's that kind of a day after a long time. Mitesh Thakkar is also with us. Mitesh, good afternoon to you as well. Are you completely convinced about this pullback? Today it's not been choppy or volatile. And your trades for the last hour?
Morning, Sarvi. I think in the morning also I suggested that time to buy call options on the index, given the fact that I was of belief that 10,950 may not be broken in the first attempt. And I think the upward bounce has started. The lack of volatility, as you have been highlighting and you were discussing with Anuj, clearly does suggest that this could be a stronger pullback than what we've seen in the last few days. So I think that's also the view in the short term. The way I would approach the index now from here is that once we start getting past 10,250 zones, then I think this pullback can extend to about levels of 10,400, 450 to begin with, and even higher levels are on the card. So I think we've made at least one very significant low. In case you get minor declines, I think that will still be a buying opportunity. Led by Pharma, I think, joined very well by the PSU banking note. I think the underperformers might do much better in this upward movement. For the timing, the two buy calls that I have, I also have NIT Tech on my list. In fact, around 1260 would be a good buy. It's moved up slightly. 1255, 1260 is the range to buy this. Keep a stop at 1234, look for targets of 1300. And Torrent Pharma is a buy. Keep a stop at 1620 here and look for targets of 1750.
Okay, so NIT Tech seems to be the consensus buy for last hour, and it's actually been quite a move in the stock. Just, today so occupied with the kind of move in ICICI Bank, didn't realize that there's a bit of a move happening in some of these erstwhile stronger stocks as well. So NIT Tech clearly stands out in that list. Of course, power, financials, all these stocks have done well. PFC is up about 10%. SP Tulsian of sptulsian.com and BSc and NSE member Deepan Mehta now join us. Good afternoon. Now, Mr. Tulsian, you've liked ICICI Bank in the past, but today we've seen a 10% move in the stock, and it's outperformed its peers. It outperformed even when the market was falling. Your thoughts on how to approach this stock from here on?
See, Anuj, in fact, we have been liking the ICICI Bank since they announced their Q1 numbers, and since then we have been maintaining our positive view. In fact, on Friday also, when it corrected in last 1 hour, we suggested a buy call. And in the morning, when you ask, when the channel asked me about the review on the results, I say I don't find anything negative in any areas. Whether you talk of the asset quality, NIM, credit growth, or maybe the segment breakup of the retail wholesale. So I think this results really seem to be a trend changer. And the positive biases continue to remain because now even the overhang of Chanda Kochar is seen behind, with RBI having approved the appointment of Sandeep Bakshi for 3 years, and the things are seen quite positive. And if you have these kind of performance seen coming in on a fundamental basis, because the advantage with the private sector bank and the financials, I'm not saying that we are not, in fact we have been keeping positive stance on PSU banks also, but if you take a call on private sector bank and the financials, in which I include NBFCs and HFCs, where we have also been giving equally bullish call, like select stocks like Indiabull Housing Finance and all sort of things. So the things are looking extremely positive or purely on fundamentals also. And if you have this kind of things coming in and see the corporate developments which are really seen happening, everyone now this SR seal is a known matter. So for some reason, if the Supreme Court allows SR Steel promoters who to rest the control or retain the control, just imagine 18,000 crore coming into all these corporate lenders. But apart from that, take the judgment of Adani Power. I think that's an extremely positive. Adani Power has an exposure of 50,000 crore, and of that 5,000 megawatt of their total capacity of 10,000 megawatt plus is seen lying in one project. So their fortune was hanging on this one thing. So the whole economics is changing in terms of the asset quality for the banks, that is more for the corporate lenders. So yes, the ICICI Bank continues to remain a positive stock, but obviously having moved up so much. But I just want to add here one thing, that if you take a call on the bank Nifty behavior, 800 points have been contributed by 3 banks: Axis, ICICI and SBI. Maybe 530 points by ICICI, 170 points by SBI, and maybe about 100 points from Axis. So in that scenario, the balancing has to done. You cannot expect HDFC Bank, Kotak and IndusInd Bank also to participate. If they also would have participated, probably Bank Nifty would have moved 1200 points. So these three, that is mainly HDFC Bank and Kotak Mahindra, has brought down the Bank Nifty by about 300 points. That's why we see a net gain of about 500 points. And I won't be surprised to see tomorrow, day after, or maybe ahead of the weekly option expiry, these two banks, HDFC Bank and Kotak Bank, also seen equally bouncing back. So let's not take a negative call or maybe bearish view just merely on this stock rotation, which is seen more to control the Bank Nifty to move in a linear fashion over the next 2 to 3 days.
Okay, by the way, lots of stocks on the move, and really it is a good day for financials because a lot of the NBFC names are now spiking higher. Look at a stock like Aditya Birla Capital, 6.5% up, and then the usual suspects, your names like LIC Housing Finance, Canfin Homes. Many of these stocks are on the upside. Indiabulls Housing Finance itself is now pushing gains of over 10%. So good day for NBFCs once again. Deepan Mehta is also with us. Deepan, we've had a couple of these days off and on when these NBFCs show some sign of life. Do you think the worst of the selling pressure is over? Would you recommend buying any NBFC stock?
Yeah, definitely. I think the NBFCs which are attached to the large business houses, could be L&T, could be Bajaj, could be Cholamandalam, Mahindra Finance. I think these NBFCs have come out and said that they've got no issue as far as liquidity is concerned, and liquidity is the real issue with the NBFC at this point of time. And also connect to that is the confidence aspect. So I think that NBFCs make a good investment bet at this point of time. But investors need to be a bit patient. You could still see some volatility as and when some bad news comes, or if there is a fear of another default or something, it could certainly dampen the sentiment there. But I think 1 to 3 years from now, we will see NBFCs have delivered very good returns going forward. And it's difficult to say whether the worst really is over for the NBFCs or not. But I think time is the real healer over here. And the more that time lapses, and the more that there is no bad news coming in from on any front for NBFCs, be it rolling over their liabilities or any problems on the asset side, I think more and more confidence will come back. And the valuations also have certainly corrected, and most of the NBFCs are now available at very attractive valuations, giving the scope for not only the P multiples to expand going forward, but also the earnings also could grow at the rate at which they've been growing in the past.
Okay, by the way, there are a lot of stocks which are making highs of the day right now. Of course, we just discussed NIIT Tech. That stock is moving to the high point right now. Intraday chart of that one should come up for you. There are other names as well, like a South Indian Bank. Bank of Baroda, ahead of its numbers, is now up about 9%. So that's making a bit of a move. Cholamandalam and Shriram Transport both making a move. Cholamandalam in particular, actually now at the high point. Canara Bank is now up about 12.5%. So that's also the big mover in trade today. LIC Housing Finance is interesting. Just pull out that stock intraday, because ahead of numbers again, the stock about 2 or 3 hours back was making lows of the day, now making highs of the day. So it's been that kind of a market today, of course. We'll take a break. Up next, we have Nishal Maheshwari of Centrum Broking joining us with all his sectoral and stock-specific picks.
What a day it's turning out to be for not just power stocks, even power financier stocks. PFC, REC, all of them are surging and are at the highs of the day as well. We'll discuss this in more detail in just a moment. But some more trading ideas first up for you. Sandeep Bagle is with us. Good afternoon, Sandeep. It's a day for the bulls. What stocks are on your mind?
Afternoon, Surbhi. I would go with a buy in a DLF, stop loss of 162, target 171, and a buy in a Balrampur Chini, stop loss of 103, target 117.
Okay, Sandeep, thanks a lot for those trading ideas. Mr. Shah, so let's discuss this power story once again. Today, of course, we have Tata Power, which is up 11%, though it's off the highest point because it slipped after those numbers. And Adani Power, which is up 16.5%. These two stocks, of course, market assuming on the positive side. But anywhere else you can play this story on power, and anything else that you would want to buy in this market?
See, Anuj, if you are only focusing on the Supreme Court order, or the judgment which they have given today, largely the beneficiary are seen 3 or 4 companies, maybe Tata Power and Adani Power, because Adani Power has about 4,600 megawatt, Tata Power has 4,000 megawatt. Apart from that, SR. So they also have their presence there. So these 3 are really seen to be beneficiary. Now, if you, as I said, that if you have 50,000 crore debt in Adani Power alone, this is just an example. And if you take this capacity, eventual capacity of at least 10,000 crore is getting positively impacted by this judgment, take an exposure of about 4 to 4.5 crore per megawatt, because I've told you that Adani Power has an operational capacity of 10,500 megawatt by debt of about 50,000 crore. If you want to be conservative, take 4 crore megawatt having the debt, because generally 6.5 crore was the capex estimated for the thermal power projects per megawatt. 70-30 was the debt equity ratio, so you have about 4.5 crore per megawatt. 45,000 crore of the exposure is seen getting positively impacted. So obviously the power financiers, and largely PFC and REC, both being the dedicated power financiers, and in spite of they having 13, 14 or maybe 15% exposure maximum to this power, to this private power producers, obviously the positive impact is going to be seen. So overall, yes, actually, if you really ask me, probably Adani Power and Tata Power may not, just be able to recover their entire under recovery, from the both the plants, that is Mundra and the ultra mega power projects of Tata Power. They will be having, but this is a big relief, at least the things, because PLF of these plants have seen to be quite low. Now the mixing of the imported coal with the domestic coal, and improvement in the operational efficiency because of increase of the power plant load factor, because which was in case of Adani Power, it was seen to be at sub 40% of the entire this one, taking their 3 power projects also in Rajasthan and Maharashtra also. So overall it is seen quite positive for the lenders, and that's what I've said, that it will have a positive impact on the dedicated power financiers and the corporate lenders like PSU banks and all that.
Okay, well, that's the power story, and it's definitely powerful in terms of the stock reactions today. These are some source-based comments that are coming in. If that indeed is the number, the monthly number, then that's going to be quite a historic achievement. We've been trying to get to that figure of 1 lakh crore rupees on GST collections in a while. It's never happened till now. Sources are saying that the future numbers could perhaps get there. But Deepan, the other area that I want to touch upon is Colgate as well as Nestle, and the way the markets read these numbers. Nothing wrong with numbers from Colgate, more or less in line. Nestle's numbers were actually very good. But the reaction is extremely muted on both of these stocks. Your thoughts?
I think it's to do with the valuation, and we've been all the time saying about high valuations, and stocks with high valuations are now being avoided by investors, and overall we are seeing in the market P multiples compressing. So even on good numbers, investors are thinking perhaps that the growth has already been priced into the P multiple, and therefore, even the numbers are coming in line with street estimates, investors are still avoiding or trying to use an opportunity to get out of the high P multiple stocks. And overall, I think there are many now stocks available at reasonable and low P multiples, and more importantly at low PEG, price earnings to growth multiple, which is why I think that the likes of Colgate and Nestle and some of the FMCG companies also may tend to underperform over the next few months or so as their P multiples correct gradually. Of course, these stocks will always trade at a premium to the market, they always have been, but it's just that some of the fraud as far as P multiples are concerned is getting corrected at this point of time.
Okay, by the way, just look at the market's mood right now. Intraday, just see Jet Airways, even that's rallied now. Intraday, that was the one stock which was down about 6%, but that's seen quite a bit of buying. The one that is surging now is NCC. Pull out the intraday chart on NCC. Again, a stock which had fallen a lot and is now seeing quite a bit of buying. 8% higher now as we speak on the stock. Mr. Wilson, any thoughts on NCC? It's fallen a lot at 72. Is it a good buy?
See, some of these EPC players are really seem to be quite good, and in fact they have been on our radar, maybe like NCC, Capacity Infra, Ramki Infra, or maybe if you want to play, I agree that there has been some shadow of this SEBI order, otherwise J. Kumar kind of things, because if you really see these companies, they have good expertise either in terms of the owning of the equipments, like maybe J. Kumar, owning the equipments, or maybe the execution capability at the end of the NCC or Ramki Infra kind of things, or maybe Capacity Infra, which has been into the construction of the multi-story substitute, or maybe one can call that as a second level of the L&T, where the multi-story building contracts are if it's going to L&T or it is going to Capacity Infra. So I think these are the few EPC players which are really seen having corrected quite a lot in this correction, seem to be having good potential, investment potential going that way.
Okay. All right, Mr. Tulsian, we'll leave it on that note. Thanks very much, sir, for being with us and taking us through all the questions today. By the way, before we move on, just a small stock to point out because it's making very big moves and it's an earnings reaction that's coming through. Snowman Logistics, maybe we can pull up that stock. It's surged to the highs of the day. Not only has the company swung back into profit, it's a very small profit, just a crore and a half, but the EBITDA performance is good, some 49-50% improvement on EBITDA, revenues up 29%. So the market's latching onto stories wherever it's perhaps finding some excitement.
Yeah, I'm just looking at the intraday chart on some of these aviation names. Just pull out the intraday chart on a BPCL ahead of numbers. That stock is now surging, and in fact, the good news comes in bunches, is it? Just see the crude chart. That's also making now lows of the day, and in the morning, of course, that was a bit of a wrinkle. But just pull out Brent crude intraday. That's also moved to the low point, and now seeing that in fact having an impact. IOC, just pull out the intraday chart on IOC, HPCL, and of course also BPCL. That's BPCL, IOC as well, moving to the high point of the day right now, and HPCL as well. So all these stocks surging as we speak. The market itself is now back to the highest point of the day. That intraday dip has been well and truly bought. 171 higher on the Nifty, 10,200, and 426 higher on the Nifty Bank, 24,850, and the mid-cap performance today, 2.7% higher. Nishchal Maheshwari of Centrum Broking is with us on the show. Nishchal, hi, good afternoon. Thanks a lot for joining us. This is Anuj, Surabhi with me, of course. Just wanted your thoughts on the kind of move that we have seen today in ICICI Bank, and that's of course carried the whole market along with it.
So, Anuj, I think ICICI Bank was very ripe for this kind of a reaction. If you really look at it over the last 3 to 4 months, I think most of the uncertainties as far as ICICI was concerned was already sorted out. So they had clearance as far as the management was concerned. Sandeep Bakshi was in the saddle, and finally when RBI gave him an approval for 3 years, I think that set to rest most of the issues. Now most of the people were expecting that there is going to be some sort of a kitchen sinking because Sandeep had come for the first time, but after this current quarter results where the asset quality is improved, there was a good growth basically as far as the top line was concerned. So I think most of the things were in place, and that's why you've seen this kind of a pullback basically happening as far as ICICI is concerned. And it has helped basically that a lot of the short covering is also there in the market. and that is what is making the market surge.
So Nishal, what would you give more incremental weight to now in the portfolio, ICICI Bank or HDFC Bank?
So HDFC's bank is always been there basically, and I would put HDFC as an equivalent weight and put ICICI as an overweight in my portfolio.
Okay. So, I mean, that's on one stock and obviously one big stock which is helping the market today. But overall, Nishal, your thoughts on the kind of pullback we are seeing, because it's after a long time that the pullback is as broad-based and it doesn't carry with it the uncertainty, the volatility and the choppiness. Your thoughts on the markets? Have we made a bottom?
Bottoms are only made on a retrospective basis,
That's
basically.
True.
So one can always call back. Yeah, so it's very difficult to actually call a bottom. But one can always look at it saying that the sharp and the severe fall which we've had, I think some amount of pullback should be seen. If you really look at it, this 1500 fall in the Nifty, hardly any pullback had happened except for once when we moved up from 10,300 to 10,700. That was the only pullback I remember, very strong pullback basically coming back. So I think it was ripe for a pullback. Most of the pullback what we are seeing is obviously the trigger has been ICICI and a lot of short covering on the market. A fall in oil is definitely helping, and currency being stable. But we have to keep in mind that the global outlook still has not changed very dramatically. US still continues to do pretty well, and the US yields, though down from the top, Fed is continuously on a rising mode. So I think sooner or later that will happen, and one has to get over it.
Oh yeah, crude is obviously helping now, once again below $77. The Bank Nifty at the highest point. Consumption names, Nishchal, some of them have corrected quite a bit. Over the last few days, we've started to see some kind of buying in some of these names. Any interesting stock or any interesting subsector that you like here?
I think in this kind of a choppy market and where the outlook still remains to be a bit hazy, I think it's best to be with the FMCG plays. I think a few of the names which we like, whether it is Levers or whether it is ITC or Asian Paints, I think all of them have come out pretty good numbers. I think ITC is yet to declare, but we believe that those numbers are also going to be good. So I think it's a good hiding place at the moment, though valuations are stretched. But I think in this kind of a market, one should be with these stocks, and we are giving equivalent to overweight as far as FMCG is concerned in our portfolio.
Okay, Nishal, so then let's come to the big black hole. I don't know if it's been filled or not, but this whole talking point around NBFCs, whether the worst of the fall is over or not. Now, would you look at bargains? If yes, what kind of NBFC stocks would you pick up?
I think definitely it is worth a bargain actually at these prices. Most of the NBFCs are quoting at, if not more than 50%, if not less than 50%. I think some of them are down 60-70%. And if you look at some of the numbers which have got declared recently, I think they have been pretty good. Yes, there is going to be a challenge as far as growth is concerned. I think most of the managements are coming out and saying that there is going to be a challenge because liquidity is not very easy at the moment. But the scare about liquidity, the scare about the asset quality, I think a lot of this is exaggerated in the market. And some of these CPs, as they get rolled over, I think a lot of this negative sentiment around this sector is going to be done away with. But I do agree that there is going to be a challenge as far as growth is concerned. And I think for the next 2 to 3 quarters, you are going to have this kind of a pain basically, whereas 15 to 20% kind of growth would be there in the NBFC sector. So market has to acclimatize with this kind of a growth of around 15 to 20% and accordingly price that. But I think it has already been priced in the market, rather it's been much worse than that. So I would be looking at bargains in the NBFC sector.
Okay, what about Pharma? Today we've seen a big move, names like Dr. Reddy's of course post the numbers. Divi's Labs has been a stunner over the last few quarters or last few months. Anything else that you think is still a good value here?
So Anuj, I think some of these stocks, obviously Dr. Reddy's, Divi's, Biocon the other day, I think some of these, the few numbers which have come out has been very good in this current quarter. And I think most of the market, I think there were expectations of good numbers, and I think the market is, the companies are declaring that. Obviously the rupee is also helping them. So that trend I seem to be continuing as far as the pharma is concerned. So once again, it's a safe sector to be in, and one should be looking at stocks where the uncertainty as far as the US FDA is concerned is already sorted. So I think Sun is a favorite for us. Biocon is also one where we are looking at it. But I think Dr. Reddy's, Sun seems to be on a good wicket.
Okay. One stock that's taken everybody by surprise, I think, in this fall is Maruti initial, because that was the one big titan that was almost infallible, right? Would you look at buying Maruti now? Some of these concerns around auto sales, are they also overblown?
So what we gather from the on the ground is basically that auto sales are slow. And obviously, the NBFC issue is also not helping them, given that 75% of the PVs all get funded. So I think mortgaged. So I think that is going to be an issue. Going ahead also, I think there is going to be a bit of a pressure as far as NBFC is concerned, and the outlook on the PV sector doesn't seem to be very strong. So I think one should be selective, but the way Maruti has fallen, it seems to be at a good juncture where one can look at accumulating this on every fall.
Okay, we discussed banks in general, corporate banks, of course, the strong retail banks. Just thoughts on PSU banks, Nishchal. Today, of course, is a good day to talk about them. Perhaps not the best day to take in portfolios. Sometimes, you do get tempted with these kind of moves. What about names like Canara Bank, OBC, the big PSU banks, where we're seeing quite a bit of buying today?
So I think Nikunj again, Anuj again, there are, this is largely short covering is what I see. Yes, some of the larger names basically we are positive like SBI or Bank of Baroda, but I think most of the smaller names we would like to avoid, given that they will be having a challenge, not one or two challenge, but several of them. One is capital, second is mergers as and when it gets decided, because government is on a consolidation mode, and the third one continues to remain on the asset quality side. So I see PSU banks best avoidable. At best, if somebody really wants to take a call, I think SBI is the only one which we think is worth considering and investing into the portfolio.
Okay, all right, Nishal, those are lots of ideas to work with. Thanks very much for being with us. Let's see if indeed this has been a bottom for the market or not. Right now, the market's in fine fettle, 10,200. In fact, building on those gains, Anuj, it's almost now, moving to a 200-point move on the Nifty. That's a near 2% rally that we are getting after a very long time.
Oh, yes. I think today the market's got a lot of people unaware.
Yeah.
And it's just simple. What's been the trade in the market, Surabhi? Any day you see a gap up, you short it.
Yeah.
That's been the trend. I think the market just decided to today just take those to
have
cleaners.
The last laugh.
And today, I think shorts have been taken to cleaners.
Yeah.
And this market has been net short. The point we made on Friday as well, that this market is aggressively net short, but it won't rally just because it's net short. It will need some trigger.
Yeah.
Now, what was that trigger? And that trigger was the ICICI Bank
I think
numbers.
that's the only real thing that changed over the weekend, right? That big number.
Also, frankly, I was very surprised on Friday to not see banks actually react much more positively to this SR Steel resolution. It's a massive positive. Should not wish that away. And I think give credit where due. Now, RIAs want to come back and say that, look, we want to pay the entire money. You can dismiss it as a delaying tactic, but the fact is that an asset is getting, almost banks are getting at least 90% of the dues in a big sort of asset. I think that is something which is extremely economy positive.
Oh, yeah.
Today, the global market has also been quite sort of stable on Friday. Perhaps that was not the case. But today, the trigger is banking. The trigger is corporate banking. And this whole Supreme Court
the power resolution as well.
Power resolution.
Yeah.
That's also, one big sector which has been in so much controversy.
Yeah.
Now, we're saying all of this right now because the market's up 200 points on the Nifty. all of this could turn back if, tomorrow, again, global Q start to turn completely negative. But for whatever it's worth, one thing which really stands out is that at around 10,000, if you are shorting this market, then you're taking a real big risk, because the risk reward is not in your favor. And at least with good quality stocks, you want to try at least buying and see, how the market reacts. Today, for example, in ICICI Bank, in the morning, if you tried, let's see, okay, the numbers are good. I know the stock has rallied, but let's try. And if you tried that trade, I think it's worked out. And in last hour, normally market do tend to sort of either end at the highs or the lows, as the trend has been. Today, the trend is up, so you're going to end at the highest point.
10,222, that's where we are. Let's take a quick break. We'll come back and get you trading ideas for the last half hour. Also, it's Monday.
Okay, things looking quite good now. 650 points higher is what we have. 200 points on the Nifty and about 465 on the Nifty Bank. Ashwini and Mitesh with us for BTST calls. Ashwini, what was that phrase that you used at 2:30 on the market?
Sort of ICICI Bank.
Okay. I think that's playing out, of course. But carrying longs, Ashwini, and you're making this point that today perhaps is not the day to just book intraday and carry positions. For those positions, what would be the stop loss? And of course, for last hour or last 30 minutes, what are the BTST calls?
See, if you got in early in the morning, you are up 350, 400 points. So you have a lot of margin. Keep a stop which is 200 points lower, because market can sometimes do a bit of up and down in the initial phase of a rally. I mean, at least don't lose money after getting such a big day. My sense is this last half hour could see extraordinary short coverage. I wouldn't be surprised if Bank Nifty does another 100. Nifty probably goes up another 30, 40. Because there are those smart cookies who keep waiting till the last half an hour to cover. Also, I think these guys, Kotak, HDFC Bank, IndusInd Bank, they will see short covering, because not only are they up from the lows, I don't think anybody wants to carry shorts home in any stock. So that should be clear. And market is going up, not because of X, Y or Z, it's because it's oversold. There is no other reason markets go up. These are, often this becomes an excuse. If we had gone down, it would be because of RBI and the government. We are going up, so, we are using that excuse. Having said that, I think the short covering rally will be fairly sharp. So, it's not like it'll hang around here and there and you'll get opportunities to enter again. Tomorrow could be another big day, because, there are shorts in the system. Individual stocks, I think the small PSU banks, they could have further substantial rallies, because this move is across the board. So Bank of India is a buy with a stop of 80, target of 87. Union Bank is a buy with a stop of 68, target of 74. And Indian Bank is a buy with a stop of 240, target of 254.
Okay, that's interesting. So Ashwini is banking on the last half an hour short covering as well. But Ashwini, chasing these PSU banks at on a day like today when it's up 9%? Or do you think tomorrow perhaps would be a better idea if, stocks cool off a bit?
Today is the first time they are rallying after 50%, 60% falls. So even if it's a 3-day pullback, it'll be large, because where are the shorts? Shorts are all in this PSU banks and financials in general. So I would think, financials have to be chased, because you have a trigger, the market is oversold, and if you are expecting 300-400 points on the Nifty, obviously these banks will participate.
Lots and lots of stocks on the move. TVS Motors is now surging to the highest of the day. And let's not forget Reliance itself for that brutal correction, but an equally swift rebound today with a gain of almost now 3.7% on RIL, 1,083 on that stock. Mitesh, your set of stocks for the last half hour?
Yeah, I have two buy calls as well. One buy and one sell. ICICI Pru is a buy with a stop at 329, more of a BTST, look for targets of 340, and NTPC is a sell with a stop at 160.25 for targets of 154.
Okay, those are some BTST calls. Divis is going to end at the highest point today, 15% higher. Those are KRBL's numbers, 74% jump in revenue at 1245 crore. Today, of course, is a good day. Net profit up 52%. The stock will rally today, 10.5% higher is what you have. Deepan, your thoughts on Divis Labs and any other pharma name that you may like at current levels?
See, I think pharma certainly is showing signs of life, and after many quarters of underperformance, we are seeing investors flocking to pharma counters. But the strategy over here has to be to go for companies which have a differentiated business model, or some companies like DVs which are engaged into contract manufacturing, and you could add Suven Life Science also to that list. That's a company in which we and our clients are invested, as well as a company like Biocon or even Jubilant Life Sciences. The common thread amongst these companies is that they are not entirely focused to a large extent on the commodity type generic market, and they are focused either on contract manufacturing or specialty products, have good amount of backward integration which kind of protects their profit and are able to withstand price erosion. So selectively, I think some names are coming into pharma companies, and many more may come depending upon the business model and how they are handling this particular scenario which is facing the pharma industry, that being commoditization of their products. So yes, I think investors can look at gradually increasing their allocation to pharma, especially for companies which have a different business model and not just exporting generic pharma products to US, Europe, and focused mainly on the Indian brands.
Okay, all right, Deepan, thanks very much. We'll let you go on that note. Thank you for joining us on the show today. Right now, it is time for Midcap Mania. So let's go across and see what stock is on Nigel's radar.
Well, as always, the stock is not a recommendation, but the one that we're talking about today is Gujarat Fluoro. Market capitalization is roughly around 9,500 crores odd. And I was looking at it on a year-to-date basis as well as in the last 1 month. The stock has been a relative outperformer because year-to-date we have seen the mid-cap index has corrected a whole lot. And even in 2018, October 2018 itself, it's been a relative outperformer itself. Now, there are two parts of the business. One is that it has a holding company. So it's part really of the Inox group. So it has a stake in Inox Wind as well as Inox Leisure. You put that together, that stake is valued at around 2,000 crores. You'll have to give it definitely a 50% discount at least. So that stake comes to around 1,000 crores, close to around 10-12% of the current market capitalization comes in only from this holding company. The other part of the business is the core business. That's the chemicals business that has gradually been moving ahead. So initially they should only sell caustic soda. Then after that, when you look at the process, caustic chlorine, from there you get chlorine, and then you mix methanol. Then in fact you come down to chloromethanes. Further you go ahead and you get refrigerants, and finally you get polytetrafluoroethylene. So basically they're gone into value-added products and they're going higher in terms of the value chain, and that's perfectly depicted. Because if you look at the revenues out there, the caustic soda business, now some of that caustic soda is being used in-house. In addition to that, the chloromethanes as well, there's not much growth over there because now they're using most of that in-house. But where the growth has come in is in the value-added products, the PTFE, and that's what's really going to give the company the numbers going ahead as well. So the CAGR has been far higher in terms of the value-added products, and that's perfectly depicted. Because if you look at the margins as well as the operational performance, it's improved over the last few years. The margins have improved from around 17% all the way to around 29% because they're going down the value chain, right? So because of that, in fact, they'll get better margins out there. And now the margins are close to around 29% or thereabouts. The first quarter of this year was very, very good. I'll be looking out at the second quarter, very, very closely. Good top line growth. The profit after tax as well came in at around 115 crores. And in terms of EBITDA, they did more than 200 crores in the first quarter. Why did the margin improvement come about? That's because the value-added products, that's where the focus is on. They're focusing on the specialty fluoropolymers. So that's very, very important. Now they're moving more into the fluoropolymer family and efficient utilization of the production capacity. So they're ramping up capacity as well. What are the triggers that they're looking at? Well, they're backward integrated. As I said, caustic soda they're getting in-house, so they're not really impacted by the sharp rise that we're seeing in terms of caustic soda prices. They've been increasing their capacity utilization levels, and importantly, most of the capex is behind them now. So now we'll see these facilities ramp up and in fact give them the desired numbers as well. What are you looking at really going ahead? The PTFE business, that's the core business. They have close to around 17,000 tons in terms of capacity. Fourth largest globally, with close to around 10% of the market share. And not just that, now they're running at higher capacity utilizations and they're already expanded, and that expansion is likely to come about in this month itself. So the second half of this year, they'll have the added capacity. First quarter of this year, they did around 200 crores. Last entire year, they did around 600 crores. If you say that they're going to do around 900 crores, that's in the standalone business, and you give it a multiple of around 10, 12 or 15, some of the competitors like SRF, they get a multiple of around 14 to around 15. So if that happens, then it looks good. But not necessarily that, the street will give it a higher multiple. As of now, just going by that number, it appears that the street is giving them a multiple of around 10 to 11 times. What are the triggers going ahead? Ramp up of the PTFE plant. Secondly, increase in value-added products. If that sales, increase, then the margins will improve. And why are they holding these group companies, Inox Wind and Inox Leisure? If they can unlock value out there, then the stockholders will be much happier. That's the promoter holding up for you on the screen with a couple of large investors as well out there. So keep an eye out on this one. It's been a relative outperformer. That's why we said we'll cover it on Midcap Mania and tell our viewers why it has been outperforming and what are the triggers going ahead.
Okay, all right, Nigel, thanks very much for that. Just again, a quick reminder, this is not a stock recommendation. It is some data points and some research that Nigel has put together. We'll take a break on that note. On the other side, we'll come back and count down to what has been a very strong afternoon of trade this Monday on the street. What is this market up to now? It's taking on 10,250 straight away. I guess this flows in from what Ashwini was saying. He was saying that, the short covering in the last 20-30 minutes could be actually very brutal. Anuj, I think that's how it's playing out. A stock like Indiabulls Housing Finance now surging with a 14% up move.
I think obviously the market's seeing quite a bit of short covering, Surabhi, and it happens. On trend days, you do end at either the highest point or the lowest point, and that seems to be happening, of course. Indiabulls Housing, Canpin, all of these stocks are seeing quite a bit of move. There's others as well, like Allahabad Bank as well. SBI has made a big move, so 8% higher on that.
All the Reliance bears are running for cover now, 4.5% up on RIL as well.
Yes, Reliance moved to the high point of the day. There's Hindalco, which has moved to the high point of the day. There's Vedanta, which has moved high point of the day, and even IT is seeing covering. Today you thought that IT would underperform. But even there, you're seeing names like TCS, Infosys also making highs. So today you don't want to, just be short on anything because, what if the market has turned? Normally the turn happens when intraday you see a massive reversal. I mean, you start with a gap down and then you, move into the green. The big reversals normally happen like that. But this could be a bit of a near-term reversal where the market's taken support at 10,000 and just moved on. 10,004, remember, was the Friday low. So from 10,004 to now, it's a 250-point rally that you've seen.
Absolutely. Well, on that note, let's welcome in our next guest. Mayuresh Joshi of Angel Broking is now joining in. Mayuresh, let me start off with a stock like Indiabulls Housing Finance. While, of course, the rally today is looking stupendous, even the last week we had some good days, it is still far, far away from the lofty levels earlier. Would you buy Indiabulls Housing?
Afternoon, Surabhi. No, again, I think when you're talking about NBFC and the liquidity concerns surrounding this universe, probably having a big effect on what kind of growth numbers they play out. My own sense is that I think all these companies which are probably in the news, one should just wait it out. We just discussed this last week as well. I think there are other NBFCs like a Chola Finance, for example, where the asset quality has remained impeccable. And even if one assumes a reasonable amount of growth to come through, I think the ROAs still are a very stupendous factor in terms of the overall earnings effect. Similarly, in the case of Shriram Transport, for example, numbers were a mixed bag. But again, assuming the expectations of the expected credit loss, the GNPA stabilizing and coming down over the next few quarters. And again, they're very, very well capitalized. So to that extent, I think the balance sheet growth can very well continue. M&M Financial also probably lies on my radar. So in terms of asset quality pressures coming down, the expectations of core growth actually being maintained and that probably resulting in better numbers over the next few quarters is something that I can see. So Shriram, Chola, probably.
Sure. Ashwini, I want to get your thoughts in on the charts for these stocks. I mean, you've been having your long trades on a lot of these banks, including PSUs. What about these favorite whipping boys? I mean, your Indiabulls Housing Finance or what Shriram Transport is doing right now. Are these good for a fresh long trade?
See, everything may not go the entire way. But like last time, the market continued to rally, but these guys started to fall, 2 or 3 days before the top. So that way, you could have 3, 4, 5 good days and then again selling returns here. So these shouldn't be your favorite stocks, let's put it that way. But even they will have substantial 20-25% type rallies from the lows.
All right, gentlemen, let's take a quick break on that note. It is a strong and solid market, 10,260. Just got a couple of minutes left for trade to close out. Let's do one thing. Let's quickly get you some views that we got from Deepan Sheth of HDFC Securities earlier in the day. He also enlisted some of the stocks that he likes at the moment.
All cues are negative, if I can say so. US or global markets, Middle East geopolitics, trade wars, FII flows are negative, government policy woes are beginning to surface, national politics is getting murky, and if all this was not enough, you now have, I would dare say, almost manufactured a crisis in the wholesale debt market. So Nifty has fallen some 10-11% over 3 months. We track about 150 stocks. The bottom 50 are down anywhere between 20 to 70%. The broad-based, the broader markets are carrying such a lot of pain. There is a complete risk of, it's not that earnings have fallen. People are just downgrading multiples and people are not believing many of these stories. So we've been saying for a while that macros are a little worrying. You know, you have a weak currency, you have strong oil prices, high crude prices, you have expanding CAD and FISC in an election year. But all the right things have been, all the right levers have been moved. And now there's a little bit of shaken faith. I think there's a Diwali sale out there. And for those people who thought they were missing out on this free ride, this is the time to start nibbling at equities. And none of the experts are going to tell you this right now.
IndusInd Bank, it's down 30% since the month of August. Of course, there are there are issues with its exposure to IL&FS, the increasing haircuts for the SPVs, etc. But would you use this as an opportunity to buy this bank?
Most certainly. Is the management high quality? Yes. Does the bank work with good spreads? Most certainly. Does it have a good diversified retail cum wholesale mix in the business? Yes. Does it have an exposure to IL&FS? Yes. It probably can be wiped out with 1 month of profits or some such. Do I recognize value here? Yes. The point is the high quality and high PE, high PBV investing trade of the last year and a half has suddenly fizzled out in the face of one little payment crisis of IL&FS. Look at a Mahindra Finance, look at a Chola Finance, two companies that we are gung-ho about, especially Chola. Look, the kind of near-term liquidity surplus that they are sitting on the 1 month or 3 month bucket tells you that the broad-based fear is completely misplaced if it's going to land on these guys.
What about RBL Bank? I mean, there are some worries about that bank. You know, valuations are a bit of a concern.
Yes.
You would still buy into that?
So, on RBL, I think our thesis is not that you are going to see completely predictable and linear growth for the next 10 years. Although I wouldn't be surprised if that was to play out. They've got possibly the highest IQ management for a bank of their size. And I'm willing to stand out and say this. We haven't seen a sharper and more focused management for a bank of that size in this country. Over a period of time, if they keep growing at this 30-35% kind of growth rate, which is possible, they are sub 50,000 crores on the book, I think cost-income ratios will come off. I think paying 2.5 times is what they're trading for right now on F20 basis is a sensible thing to do. It's corrected some 25% from peak or some such number.
I see you have Mindtree and a couple of other IT names. The question I'm asking a lot of people is this the most overcrowded trade? It's corrected now brutally in this month. Yes. But your thoughts on IT as a whole and Mindtree?
Over the last year and a half, they have grown digital in the mix to more than 40%. I think the last number was some 47 or 48%. I could be a little wrong here. So look at, this is something that even the large caps haven't managed to do. They've rationalized their employee pyramid.
Those were some thoughts that we got in the morning. Right now, the market is in a very different mood. 10,250. What a day it's been. And actually, not just the market. I mean, the stock that started it, Anuj, ICICI Bank itself is looking like it's going to go home right on top.
It is. And, again, just pull out the contribution plate on the Nifty Bank. I think the reason I want to pull that out, Surabhi, is we went through a period, remember, where HDFC Bank was number 1 and number 2 was Kotak, and together they were having 52% weight in the index. I think what has happened is, over the last few days, ICICI Bank has taken back its, deserving place at number 2. It is the number 2 bank, and if you see the weight now on ICICI Bank is 20%, and Kotak has fallen to 13%. Now, a lot of people believe perhaps ICICI Bank could be the leader of the next big run in the market. I think it's showing signs of that. 20% now on the weight. HDFC Bank is about 35%. So it's taken its rightful place. It just needs to make sure that it's just not flash in the pan. Yeah. That's the only thing, because in the past it's flattered to deceive. today's delivery number would be somewhere around 1,500 crores. So a lot of money which would have been put on ICICI Bank now. I think we need to make sure that there's no hanky-panky from here on. In the past, of course, there were issues. Those issues are well and truly behind us. That's something that we need to find out. But today, I think, has been about the move that we've seen in ICICI Bank and a lot of money moving from the HDFC Bank, the HDFCs, the Kodaks of the world to ICICI Bank.
Oh, absolutely. I mean, anyway, the management change is done, and the first quarter at least didn't give us any reason to doubt the current state of affairs at the bank, and the result is on the screen, 11% higher. Mayuresh, would you buy ICICI Bank at 350?
I would, and I would buy it on any decline, Surabhi. So again, stupendous numbers coming through on all parameters, and with the expectations of retail advances growing at a fast clip, even the interest income, where the retail fee income becomes a substantial part, supports the overall earning trajectory. So assuming credit costs coming down over the next few quarters and strong loan growth exhibited, I think the return ratios, in our opinion, can show significant improvement. ROEs might actually touch 1.1, ROEs can actually touch 11% over the next few quarters. So our positive view on ICICI, even from the current level, continues.
Okay, just about 2 minutes left for markets to close. So let's just do a quick recap. Well, what a strong day for the market today. There are two factors today which really helped the markets. One, of course, the very strong numbers from ICICI Bank, and two, the judgment from Supreme Court on power. And that really has been, about the economy. And of course, if you think that economy is going to do well, the stocks do well, and that's what's happened today. ICICI Bank easily your stock of the day, though in percentage terms there were bigger gainers, but 11% higher on ICICI Bank. Indiabulls Housing was up 12%, but the whole sector, SBI up 8%, Axis was up, a couple of other names also doing well. Adani Ports was up 7%. That was a direct play of the Adani Power ruling, because Adani Ports has a lot of volumes from Mundra, and that also is important. Reliance and L&T 5% higher. Last hour move was happening in some of these names. TCS was up about 4%. Tata Motors was up 4%. Sun Pharma was higher. On the way down, the erstwhile strong banks, IndusInd, Kotak, HDFC Bank, though off the lowest point of the day, but still going home with some cuts in today's trade.
It's been a fantastic day for midcaps. 500 points up on the midcap index, honors 3% of gain coming through. Let's start with the big winners. Divi's, of course, takes top honors, 15.5% up on that stock as we're closing out. And then, of course, that Supreme Court ruling that came in that Anuj was referring to. So Tata Power is up about 13%. Of course, the Adani Group stocks, Adani Power in particular, they'll come up for you as well. Gains pretty much across the board, even power financiers, PFC, REC, between 5 and 7% up on those stocks as well. That kind of helped sentiment on the PSU banking side. So Canara Bank 13% up, Union Bank 12% on the higher side, Allahabad Bank, BOB ahead of numbers 8.5% up, Bank of India 8.5% up. Big day for PSU banks, really. Move on to some other stocks like NCC, which was up 8.5%. We had good gains on some small names like Snowman Logistics because of earnings that came through. A good day for Raymond, 7.5% on the upside. Come to the NBFCs and the financials, and again, some solid gains here. Aditya Birla Capital, 6.5% up. Look at Shriram Transport or something like Canfin Homes. Most of these stocks were on the upside, so no complaints over there. In fact, the only stocks with some losses included an Equitas and a Hexaware, maybe a Jet Airways. Colgate has had a muted reaction to its numbers today. But aside of these two or three names, it was a very strong day for mid-caps as well, Anuj.
Oh, yes. And I tell you something, between 2:30, the time when we started closing bell, to the end, the Bank Nifty added about 200 points and the Nifty added almost 70-80 points just in the last hour. So the market was strong, but in the last hour, you saw that incremental buying, names like Reliance, of course, and others as well. Let's take some final thoughts. Ashwini, I wanted your thoughts on ICICI Bank now. It was outperforming even when the market was falling. In fact, month to date was positive even before the numbers. Your thoughts on how to approach this stock now?
See, basically 345, 350 is a place from where it has returned a number of times, and this time it failed to make a fresh low. So once we start taking out this 350, 360 zone, I think you could almost see 450 as a medium-term target. So 350, 360, the crossing of that will bring even more buyers in, and that way, you can say finally the past is behind, and possibly from here, if these better results, etc., continue, ICICI Bank could restart its long-term rally.
It's never a cozy relationship. Friction and tensions are common between the government and the central bank of almost any country. But in the last few days, the Reserve Bank and the government have been trading barbs in the public, making clear that tensions have probably reached boiling point. The first sign was public dissent of the recommendations to appoint a payment regulator outside the Reserve Bank. The second, more obvious sign came on Friday in a speech from Reserve Bank Deputy Governor Viral Acharya. Dr. Acharya pointed out 3 areas of friction with the government and made a clarion call to, I quote, maintain the independence of the central bank, unquote. The response from the government was swift. Finance Minister Arun Jaitley asserted that the nation is higher than any institution. He went on to say that, I quote, institutions should be more accountable, unquote. Interestingly, the finance minister did not name either the Reserve Bank or the CBI, the investigating agency that has also been plunged into chaos recently. The big question, therefore, to come back to our main topic is, has the relationship between government and the Reserve Bank hit breaking point? What can be done to ease the friction? We will have special guests joining us to discuss all that. But first up, let me go to my colleague Sapna Das, who has been standing by outside the finance ministry. She has picked up from government officials. What's the government stance? Sapna, tell us.
Well, the sense clearly here in the policy corridors is the fact that the government has never interfered in matters of regulation, and nor has there ever been any intention. But having said that, regulators have to be accountable. They have to operate in an environment of accountability. So, that's primary and that's foremost. They have to be open to ideas and should be participative in, important stakeholder consultations. And these consultations have to be of a certain stature. They have to be of certain value, of a high degree in quality. So, this is the broad sense that we have picked up here in North Block. Apart from that, of course, regulators, cannot not speak to stakeholders. And I suppose, the one line that really sums up the feel here in North Block is that if you only play test matches, then you're confined to the 1960s era. But to be flexible and nimble in today's evolving times, regulators, have to play or should know how to play ODIs, T20s, as well as test matches.
Okay, so that was, thank you very much, Sapna. That was the analogy put forward by the Deputy Governor, taking forward and, countered by the Finance Minister. Viral Acharya had said that governments normally pay T20 matches. They have their eye on the next election. They indulge in short-termism. And to preserve the longer-term interests of the economy, the central bank is there. It has the autonomy of the central bank is protected primarily because of its ability to take the longer view. Now, how do experts look at the prevailing situation? We are not privy to anything. Everything that is known is in the public domain. So, to discuss whether the situation has reached a point of no return and other questions, Jaimini Bhagwati, RBI Chair Professor, joins us. Good evening, Dr. Bhagwati. Thank you very much for joining us. Well, first up, the dissent is in the public domain, whether it was for the payment regulator or whether it is the Deputy Governor's speech or the Finance Minister's statements. Is it looking like a point of no return?
No, by definition, it can't be a point of no return because this country has to continue. So does RBI and the government. I think there is so much in the media now, particularly since the Friday speech by one of the deputy governors. So I don't want to go over what the various differences are. Let's take a step back as to what RBI does, which is that it sets interest rates. It is responsible for supervision and regulation of the banking sector in particular, and also for the stability of the financial sector as a whole. So these are its two main tasks. Of course, it's also supposed to look at what's happening to the exchange rate of the rupee. Now, taking this as the principal backdrop, Now, where have differences cropped and why? I think to some extent it's a question of a difference of opinion on whether our institutions are facing a liquidity or a solvency crisis. Let's take the issue of MSMEs, because there is a substantial difference within the board. And as you know, some recent appointees to the RBI's board are not people who are known in the market or in academia as people with, should we say, very strong credentials, either in the field of finance or economics. But be that as it may, I mean, people who may not have very strong academic credentials might be just as good as somebody else who does and has a PhD. But having said that, now my sense is that since RBI is in the hot seat, you have to let it decide just how it wants to handle these issues of liquidity and solvency, because one can make a suggestion and one would hope that these suggestions are made within closed doors. Whether it is the issue of the board, I find that too much is out in the public domain, and whether it is a question of the government talking to RBI and vice versa. So my concern is that this is natural, this tension between a central bank and a duly elected government. But and the government is the one which appoints the RBI personnel right up to governor. But having done the appointment, one needs to take a slightly hands-off approach. It is not, I think, something which I feel comfortable about as a taxpayer, that a certain chief economic advisor is giving suggestions to RBI about what should happen to interest rates. You can make it in private, but not in a speech or in public, suggesting that RBI tends to overestimate inflation and therefore it is not bringing down interest rates.
Okay.
These suggestions should be made privately.
Okay. I take your point. Actually, this is the first RBI which has not been very public. Their press conferences are unusually short compared to probably 45 minutes to hour long under Raghuram Rajan, and maybe 2-hour press conferences by Dr. Subbarao and Reddy before him. This RBI team is relatively not public at all. So, just to counter, it's only in the last 1 week that things have gotten terribly public. So, do you think that there were simmering differences and they've been brought into the public domain only now?
There are basic issues here, Lata. I mean, you are talking about RBI being brief in press conferences. I'm talking about keeping the conversation on issues on which they have differences of opinion, the government and the RBI, between them, not bringing it out to the surface. And therefore, I said it is not just one-sided. Even in the previous government, you might remember one finance minister was constantly suggesting that RBI should bring down rates. But having said that, I think some of these other turf issues have come in, like the payments regulator. That's fine. There is a tension there, and finally something will get resolved.
But Dr. Bhagwati,
but there is a wider, deeper...
Yeah, that's what I'm asking you. And that's what I'm asking you. A turf issue is something one can understand. I mean, haven't we had public debates on the public debt office, that the GSEC control should go out of Reserve Bank? We've had turf issues in the past as well. And that has not led to a breaking point in the relationship. Would you say that appointment of almost a political person in the board may have rankled too much? Or could it be that there were threats to the Reserve Bank's capital and that perhaps took it to breaking point?
Neither of them. I'm absolutely sure. Okay. You're skirting around the principal issue.
Which is?
Which is the fact that several banks, including public sector banks, you could say mostly public sector banks, and some NBFCs have been lending irresponsibly, or somebody else might say they had no option because the government or somebody close to government or somebody high up in the political structure has forced them over the last 10 years to lend to corporates who did not deserve to receive those funds, not their projects, whether you are all familiar, everybody is familiar with what's happening in the power sector in particular, in terms of the non-performing assets of our banks. You see, the issue here is, and I'm not going to get into the details of ILFS here, but you know what I'm alluding to.
Yes.
Many of these things are known to the people, whether it is in government or in RBI or in the market. You go and ask anyone in the market, they knew about ILFS for the last 3, 4, 5 years.
No, so
what's going on.
Yeah.
I think there is a certain amount of exasperation creeping into our central bank in terms of asking it to not proceed with a prompt corrective action. It's about beyond high time.
Yes.
Water is sort of well above our heads.
Absolutely,
and
absolutely,
I think
sir.
we need to be... So that's where I think the real tension is coming, where there are elements within whatever you would like to call it, stigmatized capital, crony capitalism, socialist capitalism, whatever you want to call our capitalism. There are people there who are exerting pressure on RBI through various channels, and that is something which I am guessing is what is really getting under RBI's skin, is that on one hand, you want RBI to be a responsible regulator of the financial sector, maintain stability of the financial sector, maintain stability and integrity of our financial markets, and on the other hand, you are trying to tie one hand of RBI behind its back as it tries to take action. I would go to the extent of saying even the Supreme Court has stepped in and said that the period that RBI has prescribed of 6 months, that needs to be relaxed. I don't know what is going on. So I can understand why somebody who just wants to do his job in RBI feels that they are being asked to do things which are not quite on the level.
No, I think you have explained it beautifully, sir. The Viral Acharya's speech quite clearly puts the prompt corrective action and the control over public sector banks as the first point of dissonance between government and RBI. And we know that since February 12, the Reserve Bank has been trying to systematically clean up the public sector banks, and that has not at all gone well with several quarters. The subsequent debt market issue is also being seen probably by the government as something that should be quickly dissipated by more money being given to NBFCs. I don't know how that can be done. There can't be a line of credit from the Reserve Bank to the NBFC, but at least maybe by relaxing rules of the PCA, the prompt corrective action, the public sector banks could be asked to lend more. This has been a constant refrain we are getting from the government, and looks like that is what took it to breaking point. Now, finally, therefore, would you say that things have taken an unfortunate turn and that the economy and the financial system are, have been pushed back by some notches because of the way things have evolved?
Not at all. You would have noticed, at least when I last looked at the stock market today, it was 400 points up.
Yes.
So it has not only digested, it has marched on. I don't know where it is right now.
No, I mean, sir, I mean more in the sense of financial sector evolution. We were looking like we were cleaning up with a strong banking regulator. Now, does it all get a setback?
I don't think it's a reflection of what the true situation in the country is. There are too many interests pushing for those same corporates who should never have got a loan in the first place for some kind of regulatory forbearance for them. And I think that this particular moment, for whatever reason, I'm not going to sort of try to do some guessing here. It may not be fair to all concerned. But it is trying to say that we have come up with some norms and please allow us to follow through on those norms. That's all RBI is saying. And I think government, if it knows more than RBI about the vulnerabilities of some of these banks, of which it is the principal shareholder, just as it is the 100% shareholder of LIC, which has some 26% equity, I don't know why, in ILFS. Yeah. But as a taxpayer and as a policy holder of LIC, I object to that, but I can't do much as an individual. Yeah. But this is a moment in our financial sector where thinking people have to take a step back. And if Ministry of Finance really has concerns about the financial sector, it should quietly give a paper to the Reserve Bank of India as to why it thinks the situation is not as dangerous as RBI feels in terms of how much the corporate sector has borrowed, and why certain select institutions should be shown greater regulatory forbearance. Ideally, I would think it should be a white paper which should be presented in Parliament, so that you and I as taxpayers also know what exactly are the technical differences between the approaches taken by RBI and the Ministry of Finance, rather than it becoming in the media an issue of personalities as who's on the board and who's the deputy governor and what is the term and whether so-and-so will get an extension or not. I think we need to get to the bottom of it or get to the substance of this issue, because I remember some time back one deputy governor was not given an extension, and that became an issue between the then governor and the then finance minister, and you know exactly what I'm talking about.
Yes.
But those issues seem to get far more prominence than the substantive issue that where are we as a country in terms of adequate probity in lending, and then follow up and adequate independence of the banks, be they private sector or public sector. And there I completely disagree with the Governor RBI. He has enough powers to be able to point out what is wrong. There's nothing preventing the RBI from putting out in its financial stability report exactly what is wrong with the balance sheet and the loan portfolio of any bank. And I think, but of course, if they choose not to do so because they don't want to destabilize the sector, that's fine too. But they could say in broad terms that we are not too happy about A, B, and C. However, we are taking action, and the financial sector should feel secure that we are adequately on top of both liquidity and solvency issues. But instead of that, we are getting this thing in the media that it's all a question of personalities. X is feeling upset
Take your
about
point,
this,
sir.
or Y is feeling upset about what Z has done.
Take your point, sir. Thank you very much. Thank you very much, Professor Bhagwati, for joining us and defining actually the nub of the problem. The problem is probably the Reserve Bank is a victim of the forces of political economy. That people want easier norms to control public sector banks so that they continue to lend to the same guys they should not have lent to in the first place. Probably the Reserve Bank being too strict on that has gone against some forces, and maybe that's why the Reserve Bank is being pulled up. That could be one of the key reasons, and I think Dr. Bhagwati argued that very forcefully. We have to take a quick break, but up next we continue this conversation. We have more experts joining us, Anant Narayan, Professor at SPJIMR, and Professor Arvind Virmani, Chairman of the Foundation for Economic Growth and Welfare, both joining us to analyze the situation. We are back in a jiffy. Has the tension between the central bank and the government reached breaking point, or can we still ease from the current situation? These and other issues we have been discussing with Professor Jaimini Bhagwati. Joining us now is Professor Anant Narayan and Professor Arvind Virmani. Arvind Virmani, of course, has been Chief Economic Advisor, member of the Technical Advisory Committee to the Reserve Bank, and therefore very much an insider in a certain way, while Anant Narayan represents the market and has seen it from the banking side. Gentlemen, thank you very much for joining me. Professor Virmani, first to you. Jaimini Bhagwati thought that issues of personality are not important here. You know, the fact that there is a political appointee in the board. All these are issues that perhaps are difficult for the Reserve Bank to digest. But the real problem is that they are being forced to dilute rules governing the public sector banks, both the prompt corrective action and the February 12th circular. Do you think that is the real fight between the two sides?
No, I don't quite agree with that. You know, if I compare what is happening now, my experience with dealing with RBI and government 20 years or so ago, what I find is that there is a little bit of greater emphasis on blaming each other rather than looking at a problem and trying to solve it. Let me explain what I mean by that. I mean, without being personal, you know, while I was in government, I was nominated to about 100 different committees that I functioned on. And the reason was not just to have committees, but to solve
really differences and divergences in professional and technical views, and sometimes even political views of people. Similarly, even these were kind of, I would say, 100 government committees, but I was also on many different RBI committees.
So you
I'm
think
just giving that as
the spirit of cooperation, you think on both sides people don't have a spirit of cooperation? Is that what you're saying?
I think it's the objective. I think people are focusing on both sides, on their way of looking at it. Perhaps government with its political imperatives, perhaps RBI with its ideological, there's no other word I can think of immediately, with its ideological imperatives, and not on taking, okay, here are 5 problems, let us set up a committee with diverse representation, people who have different views, and try to solve these out. That's why I mentioned all those committees. What I'm seeing from all the discussion is that the approach seems to be more of argument and debate rather than discussion and solving a problem.
Okay. Well, actually, this government and RBI began with, RBI actually getting more freedom in the sense that there is a monetary policy committee now. So you can't have a finance minister saying that I will walk alone if the RBI doesn't cooperate, the governor doesn't cooperate, because it's a whole MPC. So to some extent, actually, the law was framed to give the Reserve Bank more independence, to give it a monetary target, so that it can't be held. Technically, the institutions and processes were built to give it protection. Anant, do you think that while that piece may have worked, there are other pieces that have riled the central bank too much? For instance, being totally constantly arm twist on the prompt corrective action rules, constantly arm twisted to give more dividend. This is the first time that we have had interim dividends from the Reserve Bank. So do you think while there's no bullying on monetary policy, there's bullying on other things?
Clearly, there are areas of differences, Lata. And as you mentioned, the speech by Dr. Viral Acharya was extremely strong in terms of language. So it is indicative, if you ask me, of serious differences. There's also a list of issues which have been building up over the past year, actually. So starting from the Feb 12th circular, starting from Dr. Patel's speech, talking about ownership neutral regulatory powers, then the whole PCA situation, as you mentioned, interim dividend, and of course now this extra regulator coming for payments and settlements, and this whole issue about reserves, which seems to be a key feature of Dr. Acharya's speech. Maybe, and we can only speculate here, like you said, we don't know the details. Maybe the RBI, the government is actually eyeing the reserves lying in the RBI balance sheet for fiscal as well as for maybe pumping up the bank balance sheets at this point in time as a way of recapitalizing them. So there seem to be a litany of issues which unfortunately are bubbling over.
Okay. Well, Anant, react as a person who has known the markets very well. I don't know whether people can still ease off from the positions they have taken, both the RBI side and the North Bloc side. But if they don't, and if, God forbid, things were to precipitate to a point where, there are even resignations, will the financial markets react? Today, they seem, quite okay. We had a monster rally in the equity markets. So would you say the market is not expecting things to get that bad? Or is it that, this will also be taken in the stride?
I think nobody is expecting the nuclear option to be exercised. Nobody expects resignations. Nobody expects people to be sacked. These are unthinkable, frankly, and we shouldn't even be discussing this on air. Look, I think the warning that Dr. Acharya gave was pretty severe and actually right. If there was something which was to, go absolutely out of whack, where somebody offers to resign or something, I think the reaction from global investors would be extremely sharp. We've seen what happened in Turkey, for instance, where the credibility of the central bank was actually brought into question. I'm sure we will never come to that. I think the implications are just way too onerous to even imagine. I'm sure at some stage RBI and government, if at all they have huge issues, will sit across the table and sort them out.
Okay, I'm really glad to hear that that constructive interpretation. Maybe we don't even have to go that way and discuss those issues. Professor Virmani, the Deputy Governor did refer to this capital issue. You think if the government were to indeed force the Reserve Bank to, cough up some 2.5 lakh crore or 3 lakh crore by way of dividend by giving away from its reserves, how would you react? Would that be impossible for the RBI to do? Yeah. Or if they did, will that have bad or good consequences?
So there are two aspects to it. One is the assets and liabilities, which is the reserves you mentioned.
Yes.
And the second is the whole issue of dividends and seniorage. So let me take the first one first. In my view, I think it would be useful to clean up the balance sheet in terms of the debt, government debt that RBI holds. I mean, this was a big issue again in our time, and at some point we stopped this forced lending from the RBI. In my view, it would one good compromise, and I think good for the whole system, including the markets, would be for these reserves to be offset against, wiping out the debt of the government, which is basically the RBI's loans to the government. So it should be a balance sheet adjustment. I would be totally against converting, assets and giving it out as dividends to be used for for current financing of the deficit. Okay. So I feel there are two different things, and there's a right way to do it, which would have a positive effect on the markets, in my view, and a wrong way to do it, which is the second one, which is to convert this into dividends so that government finances its deficit. Okay. That would have a negative effect.
Okay. Anant, you've looked at the RBI balance sheet long and hard. Can you tell us how the reserves are split? Some of it is revaluation reserves and some of it is accumulated reserves, like contingency reserves.
Oh, absolutely, Lata. So look, very broadly, the actual retained earnings which pass through the P&L of RBI is about 2.6 lakh crores. In addition, there are 8 lakh crores of other reserves, which include revaluation reserves. In fact, a big chunk, 7 lakh crores is about revaluation reserves. So that's the, both put together is about 10.5 lakh crores, which looks large in relation to the overall balance sheet size of 36 lakh crores. So it looks like 29% of overall balance sheet, which is why, Arvind Subramaniam and others have pointed out that that number looks extremely large. We can debate about what the right level is. What the RBI has in the past focused on is only the retained earnings, the 2.6 lakh crores, which it calls contingency funds and ADF, that which has passed through the P&L, and it tends to ignore the revaluation reserves. I think that's something which needs to be relooked at, but I completely agree with Dr. Virmani. So look, the point really is not that the RBI is holding back money and not giving it to the government. Yes, it's holding it back as capital, but on the other side, on the asset side, it actually has, 6.5 lakh crores of government securities, which means it's actually lending the money it has in reserves back to the government. So, while it's not paid it out as dividend, it's actually lent it to the government in one form or the other.
Yeah, now, instead of equity capital, it's given debt capital. Yeah.
Exactly right. So, instead of paying it as dividend over the years, it's now actually lent it back because it's holding on to government securities of about 6.5 lakh crores. Now, if you say that you have to dividend out some of the past money, including, let's say, some portion of this 2.6 lakh crores, which is there as retained earnings or contingency funds, then it's a double count. You already lent the money back to the government. On top of it, you're now printing money effectively and giving it to the government. So the point that Dr. Virmani made is absolutely right. If at all you want to clean this up, you should be knocking off both sides, which is reduce some of the reserves that you have and reduce and maybe prepay some of the bonds that RBI has on its balance sheet. Giving a fresh dividend out of this retained earnings, frankly, I don't think is the right way out.
So rightly speaking, if you want to bring down this capital of the RBI, it should be done over several years, cancelling the redemptions or not taking redemptions, right? So that several years take the advantage and not just 1 year. After all, this money has been squirreled away over several years. You would rather that it be given in the next several years rather than one lump to one government which is 6 months away from election.
Or if you want to do it in one shot, Lata, the way to do it is you pay the money to the government and the government immediately pays it back to the RBI to prepay the bonds it has in its books. Okay. So it's just one entry which really doesn't lead to any money creation anywhere.
Okay.
Which is exactly what Dr. Virmani was saying earlier.
Suggesting, yeah. Dr. Virmani, just to go beyond this, do you think this is what this demand for 3.5 lakh crore has pushed the Reserve Bank over? or do you think it is the appointment of political persons to the board? I mean, how does one patch up? And by the way, do you agree with what Anant is saying, that there will be a patch up?
Yeah, but let me first address, there are basically three levels of issues. See, one is the financial system stability and the monetary policy,
yes,
which people tend to forget. In an open economy, the exchange part, the foreign exchange movement is an essential part of that monetary policy in terms of open economy macro. So this is the part where we just discussed. The counterpart of that is this whole issue of balance sheet and dividend seigniorage. But the next level is separate. It's like you know that they are separate deputy governors for bank regulation and NBFC regulation.
Yes.
And there are two issues which arise here. One is the overseeing of public sector banks and the PCA issue and the payment regulator. So if we look at the payment regulator, again, I made a general statement, but again the point is, instead of fighting over who should oversee it, one should be looking for a compromise solution. And let me just suggest to you one of them, which to me sounds completely reasonable. And this is one of the main points RBI has always made, is that now that after the GFC, the global financial crisis, it has shown that financial stability is an important thing for RBI, and if it has some of these things under it, the bank regulation directly under it, and same would apply to the payment regulator, it has more information, knowledge and expertise to deal with when the crisis arises.
Yes.
Now, to me, if that is the main argument, then all you need to have is that the RBI governor should be chairman of this payments corporation.
That's their point.
So he is able to access and get all the information and knowledge that he wants. But the CMD, the managing director, could be appointed by the government. Again, I am not saying this is the only solution. But what I am trying to illustrate is there are ways to solve the technical issues which I am familiar with from my 30 years in government. By discussion, maybe by a committee. The standard policy we used to have is appoint a committee. But you've got to have a good committee which has all the technical knowledge. These things can be sorted out instead of having a big fight in the public.
Okay. Well, the positive I'm taking from both of you is that this need not and should not become a point of no return, that all issues that you all are speaking about can be settled with mutual debate. Professor Jaimini Bhagwati was more worried about whether, for political economy and populist considerations, the government is asking the Reserve Bank to loosen up standards at public sector banks, and that is what the Reserve Bank is resenting, and that perhaps is a point of no return. We will not know, but we are all hoping, of course, that all these fights and disagreements can be resolved. Thank you very much for joining us, Professor Anand Narayan and Dr. Virmani.